If you hold title to your home and are past age 65, several recurring expenses sitting on your counter might be eligible for total legal exemption. Not just lowered or reduced, fully excused. Tax offices and collection agencies rarely go out of their way to notify eligible citizens about this. I am not a financial professional, but every week on this channel, I review crucial financial updates that directly affect older adults. We examine changing guidelines, available legal protections, and practical actions that make a genuine difference. This represents the precise type of helpful guidance I share every week, so you definitely want to stay informed. If this material sounds valuable to you, please subscribe and enable alerts right away. Now, let's explore the list. First, the property tax statement you assume is mandatory for everyone. Most property owners believe real estate taxes are uniform charges applied equally across the board. That is inaccurate. For homeowners 65 and older, up to 3 separate statutory relief layers exist to reduce standard property obligations, yet many residents have submitted paperwork for none of them. The initial tier is the basic Homestead exemption. This reduces your property's assessed value before local governments calculate owed amounts. In Florida, this removes $50,000 from taxable valuation. In Texas, it deducts $100,000 specifically from school taxes. Every jurisdiction computes figures differently, but almost everywhere, savings are significant. Here is where confusion arises. Homeowners often believe these savings take effect automatically upon purchasing property. In most regions, they do not. You must submit a brief application to your local tax assessor, typically before spring filing cutoffs. Once registered, benefits generally persist for your entire duration of ownership. Neglecting the application simply means paying maximum rates annually without reason. The second tier is the senior exemption, often called the age 65 tax relief, which operates as an additional layer alongside standard homestead savings. Municipalities rarely send this paperwork automatically. You must request it yourself. In Texas, it waives an extra $10,000 in school district taxes. In Florida, depending on location, it can effectively double standard homestead relief. Many financially secure retirees hear senior exemption and assume strict income thresholds apply that would disqualify them, leading them to ignore it. However, in over half of participating states, like Texas, Florida, Georgia, Tennessee, and Alabama, no income testing exists whatsoever. Reaching 65 is the sole criteria. The third tier, which quietly generates substantial long-term savings, is the valuation freeze. Submitting this application at age 65 locks your home's assessed taxable value at that year's level permanently. Neighborhood market value increases or surrounding sales prices over subsequent years will not impact your assessment rate. In Texas, once an over 65 tax ceiling is granted, your school tax amount is locked at the exact dollar total paid that year. If you own a paid-off residence that has gained considerable equity, this single application can save thousands annually for as long as you reside there. Second, the federal tax provision many preparers are currently overlooking. This update is recently enacted, which explains why many professionals miss it. Beginning in tax year 2025 through 2028, tax filers aged 65 or older qualify for an additional $6,000 tax deduction alongside standard filings. Rather than replacing standard deductions, it stacks directly on top. For married couples who both qualify, that equals a combined $12,000 bonus deduction above standard allowances. This applies whether you itemize deductions or claim standard limits, meaning filing methods do not alter eligibility. Income phase-outs begin at $75,000 for single filers and $150,000 for married couples filing jointly, leaving most retirees on modest or fixed incomes fully eligible. The issue is that standard tax software and high-volume return services have not all updated procedures accordingly, causing it to be omitted on standard returns. Unclaimed deductions produce no error messages or rejections to alert you. Before signing returns, verify your birth date is recorded properly, as this typically triggers eligibility, and ask directly if the bonus deduction was claimed. Combining this with long-standing senior standard deductions allows many older homeowners to lower overall tax obligations significantly, sometimes eliminating them completely. Yet, many retirees continue withholdings at previous higher rates simply due to outdated routine. Asking your tax preparer one simple question ensures proper application. Were both the senior standard allowance and the extra bonus deduction included? And should withholding rates be adjusted? There is another relevant factor concerning long-term homeownership. If you have owned your property for decades and accumulated substantial equity, federal capital gains allowances upon sale can align beneficially with senior financial planning. Reviewing tax deductions alongside capital gains strategy with your preparer can prevent larger future tax burdens, making it wise to address both concurrently. Here is a recommended next step. I have compiled details on available benefits, exemptions, and assistance programs organized by region into a simple reference guide. This saves you from spending hours navigating complicated government websites trying to locate correct forms. It is straightforward and accessible for any eligible homeowner looking to check program availability. You can find this resource linked in the top pinned comment below this video to help review options quickly. Now let's continue, as our final item shows how owning your home outright can yield significant financial relief through a step people rarely consider until necessary. Third, Medicare Part B premiums deducted automatically prior to check issuance. Unlike manual bills, this expense is automatically withdrawn directly from monthly Social Security payments before funds arrive, making it easy to forget. In 2026, standard Part B premiums run roughly $185 per month. What many individuals do not realize is that state-administered Medicare Savings Programs exist to cover these monthly costs entirely for eligible income brackets. 3 primary tiers exist: QMB, SLMB, and QI. The Qualified Medicare Beneficiary, QMB, option covers premiums along with deductibles and copays. Income limits are broader than generally expected, and many states disregard home equity or savings when determining eligibility. For fixed-income homeowners assuming high assets disqualify them, exploring these options can yield surprising results. To check eligibility, contact your local state health insurance assistance program, SHIP, for free screening. While speaking with representatives, ask about extra help, the low-income subsidy reducing Part D prescription costs, since qualifying for Medicare Savings Programs often assists with prescription coverage enrollment as well. Fourth, home utility and energy assistance options. Maintaining a home requires heating, cooling, and communication services, and dedicated programs exist to reduce these recurring costs. The Federal Lifeline program offers a 9.25 monthly credit toward phone or internet service, with several states adding supplemental credits to increase total savings. Additionally, for assistance with seasonal heating or cooling expenses, the Low-Income Home Energy Assistance Program, LIHEAP, provides direct utility payment support rather than minor credits. Combined, these monthly savings add up, helping lower standard household overhead for older homeowners. Fifth, optional property tax deferral programs. Available in select states for qualified older homeowners with significant equity, property tax deferral allows individuals to postpone yearly property tax payments. Deferred balances accrue and are settled upon property sale or estate transfer, preserving immediate monthly cash flow. Furthermore, married homeowners should note that certain senior tax exemptions do not automatically transfer to surviving spouses without proper carryover filings. Submitting appropriate documentation prevents sudden tax increases later. Finally, many states offer reduced vehicle registration or excise fees for older residents, accessible through simple applications. To make progress this week, contact your county tax assessor to verify homestead and senior exemptions, Reach out to your local SHIP counselor regarding health savings and confirm all eligible deductions with your tax preparer. Free assistance through IRS-certified programs like AARP Tax Aid is also available to help navigate these filings. This content is provided for educational purposes only and does not constitute formal legal or tax advice. Always confirm specific rules with local officials or qualified professionals.